Hey, what's up, guys? In this video, I'm going to go over setups for the week ahead on the dollar, on the Dow, the NASDAQ, ES, which is the S&P 500, and Bitcoin. So I'm going to let everybody hop in because this was a live stream. And if you're watching this, you can go ahead and fast forward a couple minutes to get ahead. All right, going to post this up in the Discord. Also, if you guys want, you can get a free trial to the Discord down in the description, as you guys may know if you've been watching me for a while. Yeah, so the first time I'm going to go over, I'm going to get everybody a chance to get in here, but one of the first things I'm going to go over is DXY, and pretty clean price action here. We traded down under these old lows. They're equal lows as well, especially if you go on a lower time frame. So there's going to be a ton of liquidity here that we took out. We came under them the last a couple days. And this has been after a pretty massive correction in the dollar that I think we've all been waiting for. And we've seen the reflection of that in nearly every other market with these massive bullish moves. Everything from the stock market to foreign currency markets. Crypto has not been as much. We've ate some off crypto nicely, though. We caught this little crypto pump and play bit. I think some of you guys may have caught on to that whenever I didn't want to show my regular Bitcoin chart because we were in the trade. That's just not fair to the private members, but I will give you guys some free game here on Bitcoin. I think that this POI is really nice, this order block down here, just because I look at it as we had like a second power of 3 right here. So we had like this manipulation, distribution. And I think that that's kind of what pushed us back up through the first range. So to me, that's a pretty important part. If we're looking for a, I guess, footprint of manipulation, just like we got this, what we used to get into the regular trade. There was another, I think it was a 1 hour. Yeah, I use this 1 hour order block, and then I put a stop under this candle, this fair value gap candle, because I like both the POIs. And the risk to reward was good enough for me to trade from that higher POI. It ended up going down to this fair value gap. But when we look over here, so we have this massive, accumulation, manipulation, distribution. Forgive me with my sloppy drawings, but you guys get what matters. We have another one on a smaller scale over here. If you look, a lot of orders built up in this range. Price moved down rapidly, and then we expanded. So where do we really expand from? Well, we already mitigated and traded back down into the zone that we originally pushed out of. We kind of came back down to this fair value gap, and then that was where the large investors stepped back into the marketplace. So that's why I like this candle, an order block on the 4 hour chart. I think that price has a good chance to go back down here, or it may reverse this fair value gap. But if you guys are not active in any swings on crypto, or if you're thinking that crypto is looking better, at least for some kind of relief, then maybe watch this zone. I wouldn't just trade from it, but if I saw a bullish structure, price rating liquidity into this zone followed by breaks of structure, I would look for longs if I wasn't already in some. We've already been on these for quite some time now. It's been over a week. So what I want to go over first is the dollar chart, because really everything that we are watching, for the most of you guys that we're watching the stock market, we're watching the foreign exchange markets with dollar pairs, which are majors, and then we're watching crypto. So if we want to see bullish continuations in any other market, that includes stock market, that includes crypto or euro dollar, pound dollar, whatever, we want to see this bearish order flow that we have kind of been newly introduced to. We want to see it sustained, because we've almost forgot what it was to have a bearish dollar. So when we look at the structure where the real displacement is, I think we have a pretty wide range that we're playing within, and you can look at it from 2 different perspectives. So option 1, and this is going to be our daily impulse range right here. You'd want to see a reaction from this area right here, or that fair value gap. And that's just the first area that's in a premium of this range. Now, again, that's just using the daily kind of most recent impulse range. And, you could move it down to here, but I think that, this is all part of the same displacement, because if we look, we never took this low really with any force before creating this entire range. So, you could say here, because we barely pipped the low, but to me, that's not really the kind of displacement I want to see when I look for a shift in structure or a continuation break of structure. So when I look here, we took that low with force here, so I want to include all of that. Now, option two, go back to a 4-hour chart to get a better view of this, is we include all of this because, that was a massive area where we had a lot of displacement. That was when we had the FOMC, if I'm not mistaken, back in early November. We created this massive fucking fair value gap. Now, I like this option overall. This would give me more confidence to, if we came up in this zone and started to reverse, that would give me more confidence in a continuation of the bearish narrative we've seen on the dollar. But I like stepping stones. So what I would say is the draw for the dollar is going to be this zone right here. So again, my reasoning for that is, we could be in a wider range. We could consider all of this. We came down and took the sell side price, showing the desire to move up. Or we can be a little bit more conservative with our price range and kind of take it one step at a time. So overall, more of the story, I'm just looking for this zone. So that's 106.29 to 107. So what that would mean is if I think this is the current draw, and not for the entire week, but overall, just right now where I think price is pushing towards, that's what I'm looking for. So if that's the case, we probably will see a little bit of a bearish reaction throughout markets. We also have this volume imbalance in the daily chart, but it's not at a premium of this range. And maybe if you draw it here, that could also be something to watch out for, which that is the 105.69 level. So there's a volume imbalance there. And then we have that 4-hour order block. Now, if I look back over the last 20 days, because if we're day trading, we'd like to do a 20-day look back to kind of see what levels the algorithm is likely to seek after. So you could do it two ways. You could do 14, trading days. That's 20 days. I like to do an actual 20 days. Just somebody's going to say, oh, you didn't do it right. But that's just personal preference. Now, this is where I got that, the last 20 trading days, this is where I got that idea that we could be trading within that entire range. So whenever we look at the last 20 trading days and we see the high and low of that area, that is, kind of our day trading range. And if we're in a discount of this range and we're in a discount of the most recent impulse range, that gives us, reason to look for upside. Now, again, we have multiple confluences we want to use whenever we're trying to develop bias. So we took out sell side liquidity at these old lows, and we also tapped off of this fair value gap right down here, really into the order block. So again, and we're seeing a pretty nice reaction so far. My cat's, he loves being the center of attention. He's trying to get in front of the computer screen. So sorry about that. If we go down to a 1 hour, we're seeing a pretty clear shift in structure now. If you draw it here or there, pretty clear shift in structure. So I think price is trying to reach up. So now for the stock market, this kind of goes in alignment with that narrative. Now, if I go on the daily chart, I talked about this a while back. I was wrong. I think it was the week before last. I wanted us to trade down lower into this, but I was wrong on that. I still like the level. I was just wrong on the timing. So whenever I look at this level and I kind of like look in this impulse, so to speak, you could really draw all of this range. That would give us that low right at equilibrium, fair value gap, and unmitigated order block just below. Also, if you notice, that is also pretty close. This is the last 20 days, so you'd move it here if you want to be really specific, but we're also in a premium of our last 20 trading days. So we have that internal sell side liquidity resting right at equilibrium, right? And there's going to be a ton of stop losses there because if we go down to these levels here, there's going to be a lot of stop losses before we even get there. And really here too, I think a lot of retail traders are going to look at this as support. This right here is looking like support. It's kind of like a buy wall. So I think that whenever we have clean levels like that or clean areas, clean zones, they like to get clocked. So we've got equal lows on the 4 hour right here, here, and here. We've got this internal liquidity resting right at that equilibrium of the 20-day trading range. So I think the overall narrative here is going to be we're going to see some more downside. Now, we also took out this volume imbalance, traded into that order block that we created before that massive CPI dump back in September. So, a lot of stuff would make sense to see some form of retracement here. We also took out local buy stops, right? Those equal highs, traded above it, and now we've fallen back in the range. So another thing you can look at, just because I get a lot of questions on Power of Three, and I think people overcomplicate it. It's really just kind of it's a concept. It's just, accumulation of orders within a range. So we see a range, a sharp push out of the range, and then a massive push back down. So I think that this is what we're seeing here on ES. So overall, I would look for, me personally, I would look for sells. I'm not going to say every single day is going to be a massive sell-off, but I would be a little bit more bearish into these lows. And again, I'm all about stepping stones. I like this better as a final target, but I'd be watching price here for a reversal because I don't like to get kind of married to a level, so to speak, where I just am forcing that gets hit. I'm just looking at it, what way is the river flowing? Where is price likely to move towards next? So I'm looking down. We have this zone. I have it marked, right? So now some of you guys are probably like, what do you mean? I have it marked just because, it is, when we're looking at right now, we do have bullish order flow, right? We're taking higher highs, making higher lows, but we have to look at that in the context of that daily chart. We have to look at that in the context of the DXY. A lot of different things that can help us, kind of develop a early bias or an early sentiment before it happens. So overall, I think we're drawing down with ES. It's very similar on NASDAQ. I think NASDAQ's better selling opportunity as of right now, at least, just as far because we're farther away from this low. Look at YM and ES; they're both pretty close to those lows. I think that's the next stop. So you can look at it. We could try to look at it from a long term, long term for us day traders. It seems like that's longer than a day for a lot of people, but not. I shouldn't use the term long term. We could look for a more, something that's going to take days to weeks, which I think is going to be down in this range. That low 39.12 down into this fair value gap. Or, you can develop draws on liquidity on like lower time frames. So like, for instance, if we're on a 15-minute here, I'm not going to be that guy that's going to call a level that's, we're right next to, but, up here, let's say if we're up here in the range, well, we had that overall bias that was bearish. If you look down here on Friday, and after we took that buy side from those equal highs, and then price made a clear decision to start pushing down. So how do we know that? Displacement, and you can just see that price, is beginning to be on that sell side of the curve. We're going down, taking all the stops. So stepping stones, I would say this low, and then down into this fair value gap. Then kind of revisit things, but be mindful of all these equal lows. So Bitcoin, I think, is going to come back down to this POI. Again, I kind of went over that in the beginning. That's where I would revisit it. We're already in longs. Some people taking profits, some people haven't. But that's the zone I would be watching. I still do like 18 up here, 18,200, this level right here, 18,230. Because we had originally the final TP for me was going to be this. What I'm going to do now is I'm just going to take 75% here and stop to break even. 75% of what's left. Look at some of these questions. Hi, Casper. What's up, Bjorn? Joe said, do I think Bitcoin will sweep 16.7 before our next leg up? What is 16.7 this? Oh, yeah. Well, there's your answer. Yeah, for sure. Good eye. I would say that's what's going to happen for sure. And you can do the same thing I did with the stock market on crypto. I mean, I just think crypto's kind of consolidating. I think we're in a discount of this range. We obviously have taken out everything known to man in 2022 after the FTX madness. So, do I think that this is for sure just the bottom of crypto? I don't necessarily want to say that. I don't want to say it's not. But again, I'm all about stepping stones. I'm not looking to try to catch the entire bottom. I will say, though, I am more bullish. If I had to lean, I'd lean more bullish overall. Now, that could be another massive fucking manipulation range, because if we're looking at this like a daily power of three, I mean, we've already been down here for some time, to be honest. It's crazy. That was 11. Damn, it's almost been a month since the FTX shit. That's fucking Scary kind of how fast time goes. I honestly don't like that whenever I realize it's been like a really long time and I thought it was like really short. It just shows you how quick time goes by. What's up, Bloom? Fair value gap at equilibrium there as well, right above or around the order block. That was early in the stream, so probably DXY. Yeah, that's what you're talking about right there. Maybe, I don't know. A little fair value gap. Also, how do indices correlate with the dollar? Same way that foreign currencies correlate with it. Yeah, so basically just like the dollar, think about it, if your pair has USD, so if your pair has USD at the beginning, that means if the dollar pumps, your pair is going to pump too. If it's denominated by US dollars, which means it has US dollar at the end, then if the dollar pumps, your pair is going to dump. So for instance, a bullish dollar is bearish euro dollar, bearish cable or pound dollar, bearish Aussie dollar. A bullish dollar would be a bullish dollar CAD, bullish dollar yen, bullish dollar Swissy, and so forth. And this same thing goes for gold. Indices are also, a United States equity, so they're going to be denominated by the dollar. So the dollar is, just think of it like, value pits, like how much money or how much value is our investors pumping into the dollar by taking profits or by selling assets. Because if the dollar is bullish, that means that large funds or large forces and large investors are taking money out of investments or taking money out of other currencies, so to speak, and putting that into the dollar. That's the way that I was taught, and I mean it makes sense. I mean it's obviously a little more complicated, but that's the gist. That's what you need to know. Also, thanks for the good vacation wishes. I did have a good vacation. What's up, Hodo? What's up, Haas? Braden? Where's the crypto? Good, bro. How you doing? Hell yeah. Where are the rest of the degenerates at today? The keys. Yeah, it was fun. It was fire for sure. Super chill, super lax. I mean, there's like a party scene down there, but we didn't really do that. We just chill. Like we went, we did like a sunset cruise, like a booze cruise, where it's like you sip like mimosas and rum punch, and they go out and have like a live band on a big ass boat. They go out for like a couple hours in the evening. Then we did like a dolphin cruise. We actually saw dolphins, because everyone I've been on is always some horse shit. Like they're like, yeah, dolphin cruise, and there's never any dolphins. But I kind of knew. I just wanted to go for to be on a boat, But there actually ended up being dolphins, so it was pretty cool. Yeah, it was fun. I feel like this is literally the part where everybody's like, all the people that were like shorting the fuck out of this entire pump now are going to buy. Yeah, I like oil, Sensei. Yeah, you know what I'm saying? That's why it's just like I swear I've seen Sunny Peel start getting bullish. Oh, I already have. Oh no, US oil is where I need to do my TA. That's crude oil, dude. I don't know why I'm not trading. There it is again, smacking levels. Fucking what is this? 83 at 83.28. What did it hit? 83.32. Those monthly levels, whatever side of them you're on, they always be smacking up, especially if they line up with other stuff. So I think we talked about this a little bit, that we were going to draw back up into this weekly imbalance. So this one, I would say you're starting to get to that point where we're around a lot of levels and price is kind of consolidating and coiling. So like you've hit this weekly imbalance, you are in this order block. So I could see some consolidation and maybe more upside, to be dead honest. But right now, this is something I would be like really using the stepping stone method, so to speak. I would just be looking for this fair value gap that you're almost in already, and then wait for a reaction. Oil's been super clean lately. So, I mean, and if we don't get a reaction there, I would say that the overall draw would be that low, like $73. But again, you're getting close to, you're in this monthly order block, right? You filled the monthly fair value gap. You've ran liquidity inside of that. Now you came up and rebalanced, or not rebalanced, repriced into this fair value gap. So you're starting to take out those walls, so to speak. So like, for instance, if price comes down, like let's say we have an order block or whatever, whatever area you want to buy from, and price comes down into it very rapidly, like you get like a massive push down in, or you get like, prices consolidating and it gets a massive push. That first push out is not going to be the one that usually gives you the best reaction. Like it's not just going to do this. It's going to probably move up, kind of do like a stair stepper method, and it builds up that trend line liquidity where retail looks to go long, and then price, hits that fair value gap. So like for instance, if you made a big move down, so you've got a fair value gap, price is usually going to react from that. But once that's gone, once you take that out, you're kind of paving the way, so to speak. If the overall narrative is indeed bullish, this is what's going to happen before it goes really bullish. And then you're going to get more liquidation of early longs, and then the true move starts. So with oil, if we look on the weekly, we have that fair value gap right there. Price traded right into it, right off that old monthly, or the beginning of that monthly order block. And now we've shown the desire to want to push down. We formed a swing high. Price is running liquidity right here. You can see it better on a lower time frame chart. We ran liquidity and now massive push down. Super big break of structure right there. So, if we're looking at a 1 hour, let's go to 4 hour and our daily, sorry. So you've got this daily fair value gap. I'm going to go on a 4 hour to kind of refine it. Got some equal lows right here. Oops. I'm only going on 15 minutes. Just like look at this. All right, I guess I can't. There we go. So a lot of equal lows right here that we're definitely. So I mean, it's literally about to take it. I don't want to be that guy. I hate when people be like, "Yep." They'll like put a picture of this, and then it's like, "Yeah, I called that shit, bro." But that is where I think it's going, and I mean, it's going to go to this in this fair value gap on the daily. I mean, you're kind of following order flow too. If it reverses here, that would be bullish, because again, like I was saying, like we came down into this weekly order block, right? Yes, we had the imbalance because we came down into it sharply, but these are pretty strong levels. I think we're at a monthly order block. We can refine that down into this massive one, the largest candle in terms of body. Tapped into that. We've ran liquidity into it right here. So we came up, tapped in that fair value gap, got our normal reaction. But if we start to see bullish order flow, after you maybe take these lows out or take this low or anywhere in this region, right? If we take a fib and draw it on this whole little move, we've got some liquidity here that could get ran under that low. I've got this right here. We've got this fair value gap. So there's a lot of stuff that could help the price move up. So if you get, I would look for like a 1 hour just to be safe here. Like if you see price come into this, get your reversal pattern. You get that like literally anywhere on this whole or in this whole range and a discount, I'd be looking for longs. I think what's up? How's that flow? You see your mic sound hella different. How you doing? Good, bro. Hell yeah, show was fucking fire. What is it? Oh yeah. Like the horizontal. I started fucking with these. They can get a little overbit. Like I need to clean up some charts. Like my GU chart's fucking starting to. My OCD is getting triggered. But man, this shit's actually really fire. Now that I look at this, like it traveled through this fair value gap, came down and went right off by the bottom. What is that? 19008. It was like 8. I know that I can't remember the word for that. Pipettes. Yeah, I think we're gonna move down a little bit on what's it called? On equities. Yeah, this low right here, 30. It's 30's a little cleaner to be honest. I've been testing this strategy, bro. It's like a super weird strategy. Like I'd almost have to like have somebody code it because it's like super low risk to reward, but it's fucking really fire. Like it's crazy. It was like it was only like an average R of 2, and some of them it would be like somewhere 3R, somewhere like 0.9R. But it's like some like super. It's some like a robot type shit. I don't know if I could even do it like myself just because. I mean, I probably could, I guess, but it was on 30. The strategy was on 30, and it was like 10R for every month for like 3 months. I need to do more. Yeah, I was like, damn, but it was like a rocky ride though, to be honest. And oh yeah, that was also risking 2% of the account on each trade. Yeah, it's pretty dope. And it's just only no bias, nothing except one chart. Like it's literally just one. It's like some straight algo shit. Like you'd have to, yeah, like it's like one time frame, one type a day. It's like weird almost, bro. Yeah, that shit's crazy. I mean, simplicity is key. It really is. Yeah, see the Dow looks better than anything else, but at the same time, we took out those August highs. I'm gonna look at that actual like US 30 chart for this. It'd be easier probably. Yeah. Well, actually, I don't know. It kind of didn't tap where I would usually want it to tap. That went a little higher. Wait, look. Yeah. 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 If you draw the zone like this, actually, this would be like the ICT order block too. Would be all three of these candles, like that day on the daily. Yeah. So this actually looks pretty good. I like that better. I was being greedy and drawing the max candle, the full port candle. Oh yeah, this actually likes. I mean, yeah, if we start to get, fuck, bro. I mean, honestly, like if I go to like a weekly, because the US 30 has been like straight shitcoin pumpage. I mean, literally, if this is the same level, just look on the daily. I feel like that. Yeah, I feel like that we could see some like 31.7 type beat over time. I don't know though. That kind of is like dependent too on like the Fed, because if they come out and start talking that no or slowing interest rate talk, shit's gonna start getting rowdy. Oh yeah, like the massive. Because when we first started this rally, I kept wanting that to get ran, and I was like, "It's not happening, bro. Just wait. It's gonna be months." It's like it's not. That would be fucking sickening. Everyone would be liquidated. I mean, yeah, if I was looking at this, like if I looked at this, like just this on like a 15-minute chart, I'd be like, "Oh, I'm about to short of this though." I always try to think like that. I'm like, okay, like because it's always like the times where I'm like, I either like think something's too crazy or like, nah, that ain't gonna happen. Like it always happens. I feel like, yeah, like you said on the, if we get a displacement break on the daily, like of this recent little low we put in, and then like start to follow that, I mean, I would short all the way into like 31.7 before I would even think about like changing up, and then really still be bearish until another daily break up. But ES though, I feel like ES looks fucking like ES and Nasdaq look like ES looks good in my opinion. I mean it definitely still bearish order flow for sure. I mean it's but like as far as like the bottom we made here, we had that high resistance run on liquidity, not like the Dow is a low resistance run. So like that theoretically would be targeted, like what the lows you're talking about. But then on ES, those would be like protected. Well, I mean until they've kind of already done their point though, because if we on the weekly chart, we've already came back into a premium of this range. I mean, if we're just talking about price action and like nothing else, like theoretically, there is not really a reason. The only thing I could see that we haven't cleaned out is this volume imbalance, and that's like literally it. That's at oops. That's at like 42.36. Yeah, that's the only thing like that. I mean, and to be fair too, I always like one thing that I've watched for recently is if I'm like just ranges, like any kind of liquidity like that in a range, like I like that getting ran. Just even if there's not a POI beyond it, just because it's like liquidity in a premium. I need to draw this different. There we go. Yeah, no, that's always. Did I have a thing? I don't think I have a daily volume imbalance yet. I'll just be writing it. That makes me sad. I don't know why. I just want this to talk. I just want shit to be bullish. Like I'm like fuck. Yeah, like, but like then at the same time, like, bro, like, I mean, because if I look at like because I always get on myself if I ever like switch up shit, like, because I try not to do that. Like, but if I look at like DXY on the yearly chart, which I know that's kind of like ridiculous, but I mean, like, it looks like a straight fucking ICT order or ICT entry. Like, look at this shit, bro. Like, you know what I'm saying? Like, this shit looks like it's about to fly, bro. Like, at least here, at least like 121. I also, because really though, it's crazy. So like I use this thing. This is from like the 2016 ICT. It's like you get like the monthly order blocks that are like the most recent pro trend order block, and it doesn't have to even break structure. Anything. It's just a candle got engulfed and traded through, and like you use the most recent. Yeah. It's usually it can be a rally based. Sometimes it's not. It really depends. Like sometimes like if you're like which one was I looking at recently? There was one that was actually like clean because I was showing somebody this. It's been actually a little while since my charts have probably been marked up, but basically it's just that that like last pro trend, so to speak, order block. So what was it? Oh yeah, DXY. So like for instance, like here we're moving up, we've got this down close candle. So it's like that would be the first one. Then you take the next, like the most recent candle to it as a bearish order block that doesn't touch its like high or low, and you use wick. So like if you draw left, the most recent bearish candle that doesn't touch it is all the way up here, which is at 116. 40. Now, the only thing you do from this really is this is just like a long-term range. Like you can incorporate it into like your regular premium and discount. So like for instance, like you'd say, okay, well, you could use it as just like a conflict. Okay, well, we're at the bottom of this range. You know what I mean? So like the last kind of, so like here, we haven't hit the top yet, but we're in a discount of it. So that was also going along with the DXY analysis I have where it's like, modest targets, very modest would be like 107, 106. I think it's probably going to go higher, like take out all these highs into this imbalance. And then there's like that daily zone. But at that point, then it's like, okay, well, if we want shit to continue, it's really going to determine, or what's really going to determine it is just the Fed stance. I think, and I don't want to like trade off of what they're saying, but like it's good that it's going to be at a key level one of these FOMC days or close to it, and then we're going to see. Yeah, it's like bro, like this shit. I remember on like ES in like September. I think it's not on this chart actually. Go back. This shit was so fucked up. Like I was like, this is like, it's like legal scam shit, bro. Like I swear is. Like it really was. Like I was like, bro, what the fuck? Hold on, is it this one or is it? It's either ES or Oh yeah, watch this. This is what it was. So it's like, okay, here's the daily order block, like the body, just the last candle, so to speak. So I'm just gonna draw that and make sure No, it's not this one. It's I think it's NQ because it was one. It was like literally, bro. I like tapped it and I was just gone. I was like, Jesus Christ! But it's like open scam shit. It might have been. Let me see. No, I don't think it was NQ. Actually, hold on. We got the daily. That was a weekly. I don't know. Maybe it's. Oh, I'm looking at the wrong charts again. I did the same thing. Well, this ended up getting smacked. Oh yeah, I think it was right here. Yeah, this is it right here. Like, look at this shit, bro. Like, what the fuck? Like, this was like that. It's like, bruh. Like, if you just shorted that order block, bro. Well, oh yeah, no, for sure. Like just trading the daily, like just the daily, bro, you would have hit like I mean, obviously no, like this is hindsight, like this would never happen. But just like that, just that would just instant zero drawdown, like 7R within like I think it was like bro. But um like another thing too, like the thing that's funny about a lot of people don't realize about funded accounts is like they're not even like even when you get your account, like for the first couple months, it's still not even real money. So like you'll get filled because ICT was like talking some shit. He was like, no one could have got filled here. Like no one could have. And I was like, okay, well, I did. Like I know I did. But then I'm like, okay, well, he has a point though, because like even though I'm on funded live, the firms, they're a casino model. Like just like CFDs, like you're not even trading with real money. They're literally paying you with failed people's challenges. Yeah. So like a lot of people that's what CFDs are. So even if you're trading, like even if you're on like Eagle Forex or any broker with your money and you're trading like indices, it's a CFD, so it's a casino model. So basically, they pay the winners with the losers' money and they keep the rest. There's actually no instruments exchanging hands. There's no liquidity. It's crazy, and that's like, bro, what? I remember when I read that and I was like, okay, like it's just, bro, yeah, right. You don't. But here's the thing though, the prop firm game, like a lot of them are just like they're all the same fucking investors at the end of the day. It's just different front end. So like, like FTMO and MFF run their own, but a lot of these smaller ones, they're like the same groups of investors like that, people they just develop the front end of the business. And then there's the firms that actually have the money and it's all the same firms and shit behind a lot of it. They're foreign banks, but it's pretty crazy like that hustle. Fuck that. I would never want to put my yeah, no, yeah, for sure. That's what Mint does. I'll go ahead and tell you right now. 100% for sure. Which is the smart way. It's the smart way to do it. Damn, look at this, an Aussie dollar. Oops, wrong chart. It's gonna go for these lows. Shit. I like this for Aussie dollar. Damn, it's like I went to the beach and everything's bearish now or some shit. For at least for right now. I think this shit will probably get ran. Yeah, it was fucking dope, bro. It was actually like cold, like good, or like physically cold. Oh no, I didn't know if you were like, was that shit cold, bro? But no, it was it was like 80 degrees. Nah, yeah, it was like 80 degrees. It was like 79, 80, 80, 85, like that range. But it felt hotter because bro, why am I getting these emails? I had these emails for Meld, which is like ADA Ave, like it's like they're trying to like be like a lending protocol on Cardano. I give it to them. I mean, none of these Cardano, they're all building still. Makes me just want to like YOLO. I just know I'm gonna get rugged. I'm gonna get rugged for sure. I'd put like $100 in it because there's like a lot of times like where I wish I would have done that, like just like $50 or $100. I want to see what the fuck is this even like on exchanges yet? I don't think it is. Oh wait, oh no, these don't count. MinSwap, that was another one that was. Because I remember whenever like before the crypto just died, and the volume's so low, that's crazy. But I was looking into like the ADA ecosystem, but that was before they had like the Alonzo failure where they couldn't even fucking. It was like back in September last year. But I think once they get their shit together, because they have a lot of government backing, like Cardano is like they're super in with which some people don't like that, but they're super involved with a lot of very large bodies. Yeah, I think it's good too. Like I'm not trying to be on some like fucking uh you know like if I like it's like simple like okay like XMR like if you want to be like if you want like nominate fuck I can't say that word, I always say it too fast, but you guys get the picture. Anomaly, and you want to use crypto for that reason, like just use XMR. It's like that simple. Like don't even worry about anything else. Yeah, this shit. Damn, fucking Aussie dollar looks like fucking shit. Not like, let's see. UJ is this shit's always on some fucking bipolar shit, bro. It actually trades nice though. Yeah, it trades nice though. Yeah, that shit's fucked. I mean, this to me, like, so like the monthly levels, it's right at that monthly level. Like, so it's at a discount of that. And then if we do like the 20-day look back, like 20 trading days. Yeah, like that's gonna be, so 20 days gonna be right. That's the high, and here's the low. So yeah, it's like there's these equal highs, right? And I don't know why I keep drawing this backwards. Yeah, no, I fuck with this. And there's like that fair value gap. This also goes with DXY too. Dollar CAD's looking crazy as well. Yeah. Shit looks crazy. Like this shit, I like dollar CAD, bro. Yeah, shit looks crazy. And it's like also 980 to, what's it called? So it's also theoretically it would be oversold using this strategy, so to speak. But I always take that with a grain of salt. So this would mean like the new range you're playing within would be there we go. So you'd be obviously you're oversold, so to speak. You're under the range. So then 20-day look back on this. Where's the lowest point? I'll just do this. This. Yeah, that's super clean too. And this shit looks big bull. Yeah, if we can get above this, I mean, it's pretty positive it will. But if it gets above, like, really, I mean, if I want to be conservative, this. But I honestly just kind of like it already because if you like right here, like that high got taken, and we didn't take that low again. So like this, and then this right here. Which looks good. And then it's like at that point, it's like next fair value gap's about to be lift off time. That'll be like because it's like so much shit, bro. Like once it's like all the same. Like for instance, like wait, this is US. This is dollar Swissy, not dollar CAD. By the way, I'm an idiot. Dollar CAD is fire too. Dollar Swissy is looking wild though. They're not as good as others, but they're not terrible. They're not like untradeable or anything. I mean, not on MFF at least. They're like a couple pips. Like it's not like GJ. I don't think. I don't know about on FTMO, but yeah, this shit looks fire. Yeah, and it moves pretty crazy, bro. Like it. I mean, it's moved almost 100 pips since fucking London session. Yeah, I just trade New York. God, this looks fucking fire, bro. Yeah, on the 1 hour, it looks clean. Yeah, for sure. It's fire. I like trading it. I've traded it like 3 times in the last week. I got clapped once and then did good the other 2 times. Dollar CAD, now that we talked about CAD, this, oh my god, this looks crazy today too. Dollar CAD's been looking fire though. I just have got more into trading Forex pairs because I swear I feel like a lot of times I can get higher risk to reward. Something like if there's a week, yeah, if there's a week where I'm looking at like indices, I'm kind of like, and not like, this week looks good. Like I like shit this week, but like on like for instance like that fucking dollar Swissy shit, like you can get massive fucking risk reward there. Like just trading like the higher time frames, right? You could have traded the fucking 4 hour if you just traded this first like little zone right there. It's like fucking 1 point. You know what I'm saying? It's like, bro, what? You can min max that to like crazy shit. So I like trying to get like 2 is cool for indices just because it's so fast and I just know how they move. But if it's anything else, I like 3 to 5 is like a good sweet spot. And then I've been trying to just like full TP shit too, like not trim early and also not like leave runners like crypto, like Bitcoin. I want to leave runners on this just because it's like, okay, that what if, like whenever you look back in like 2023 and Bitcoin hit like 30K and you had longs from the fucking actual bottom and you closed them all. But yeah, for sure. Oh yeah. Gold's where I wanted to long it almost, but I don't know if I'm gonna actually do it now that looking at DXY. Yeah. Yeah. I still want this shit down here, bro. That's the premium or discount of this fucking do this. Yeah. I could take these high. I did take that high actually. Oh yeah. I like this. If it could come down there, because like that, there's a zone right here. I wanted this would get clocked or trade from it, one or the other. But I think because JL was talking about like something along with Wyckoff, like this low, he was saying meant something like from this range. Like this low had meant something, or he had said something about that low, and it lines up exactly with that zone. You know, it's pretty dope. Yeah, shit looks fucking gas. BNX finally died. Did it really? Oh my god! Like actually died. Yeah. Oh my god. That's crazy. I've been fucking charting this since May. The devs fucking just made, and it was like a metaverse game, bro. Like I looked it up. Yeah, I was like, bro, yeah. Like it was literally like some kind of. Oh my god, their website I think is done. Oh, never mind. Because it said, look what it said. It said we're sorry, but BinaX doesn't work without JavaScript. I was like, oh. So you go and it's just like a 404. Yeah, it's like some like fucking game. That's crazy, bro. Yeah, literally. Yeah, that dollar, bro. I mean, it still could go down lower because there is lows here and there's a fair value gap there, but I don't know. I like where we're at. Shit, I'm probably about to hop off here. I just realized what time it is. Fucking, every time I like go on a vacation or take like a long weekend, I'm always like so sluggish getting back in the first day, like so slow. Well, shit, guys, I appreciate everybody coming through. Let me answer some questions on the YouTube because I haven't even had this open. Sorry, guys. Okay, let's go back. So gold, yeah, we kind of just went over a little bit, but for gold, for what I'd be looking for, since we came back out of this, we came out, we had this range right here, so we'd be looking at a potential power of 3. We came back down out of it, sharply into it, and created a new little impulse move. So I want to see a retracement to the discount of it, which I like this fair value gap, 1702. So like I'd look for like 1700, but I don't think it'll be. I don't think it's going to be like a straight shot because I liked this level right here. I will say that I'm a little less interested as far as like to swing anything from here just because of DXY. But if it happen, if it's still in this zone tomorrow during New York session, I'll look for a raid to maybe get into a trade. But other than that, I would look for overall downside into 1700. Aussie dollar, we did go over Aussie dollar. After that, do I know a method or candle formation to watch for when candles form around price delivery arrays to watch if they will hold or not? Yeah, I would just look. I wouldn't look for candle formations, just structure. So like, you could look at it. I mean, you could say it's a candle formation, I guess, but really, the classic. You just want to see like maybe consolidation, a push, and then sharp move out of there. So you want to see, it can look a lot of different ways. In a live market, it's always going to look, um, there's going to be mass amounts, but the principles or the concept you're looking for is a shift from lower highs and lower lows to making a higher high. And you want to do that displacement. You don't want to have like the candle come up here and then like shoot back down and have like an ugly ass long wick. You want to have a full bodied closure. Some people don't use closures depending on the time frame, but you just displacement is the key. So like for instance, like if I'm looking on the weekly chart of gold, like this is displacement, like this push out of that, we came down, we took out these lows, that big push, taking out a high, that to me is that, like what we're just talking about. So hopefully that helps. It's Scarb's live. Yeah, Scarb's doing good. He's trading a lot of sports, or not trading, betting on a lot of sports. Scarb's the homie. Rare Honk. Hey guys, Bitcoin go up or down? Down then up. Casper, do you use time as a major player within your trades, like seasonalities, kill zones, quarterly shifts? Yes, 100%. Seasonalities less, but kill zones and quarterly shifts for sure. You can actually go back and watch a video I did. It's called "Will the Markets Recover?" It's on my YouTube, and I talked about the importance of quarterly shifts, and we called the entire recovery of indices from this June level. And it was because we were going into July and T-bonds. And it also talks about how to use interest rate or T-bonds to kind of determine what the Fed stance is on interest rates and using the dollar. Super interesting video. So definitely go watch that if you find interest in that stuff. Oh, what's up, Chapo? How you doing? Thanks for the answers, Casper. Appreciate your time. You really are a great help. Hell yeah, I'm glad that I helped, man. And as far as bias goes, like I hope that I try to simplify it because it's really just like what kind of liquidity have we taken? Are we on a premium or discount? What is there at the opposing market extreme? And then what context are we in based off a higher time frame? Coin, I'll check good old Coinbase. The Ponzi. I'm just kidding. We might not be kidding. Who knows? So we took that weekly low. We still got a lot of liquidity down here to take that. Actually, hold on. Yeah, I did take it. So we took that massive low down there. So, I mean, you just made all-time lows 2 or 3 weeks ago. So, if it were me, I'd probably, unless you have some kind of inside information that Coinbase is going under or some shit, I'd probably chill on shorting it and let it do its thing. I also don't know if I'd be buying it yet either. Where it's, it did take a low, yes. On the daily, we are starting to kind of take out highs, but this isn't really the displacement I would want to see. I think you probably will make another low. Like you might come up into this fair value gap, something like this, and that volume imbalance, and kind of make a shift back down. This is not in my opinion, this is probably not the chart I would be trading. But if anything, I think a little bit more up and then down or just down. But I think really the value would come if we could come back down under this low, like take out that liquidity again, and then get that shift. Again, it's all about like kind of paving the way. Like you're not just going to get like, we're going to take out the weekly low and it's going to rock it. It's going to be manipulation. It's going to be consolidation. And yeah, I got you. Of course, awesome. I'm going to do Tesla for you. Tesla's chart last time. It's been a while, so I like the Tesla. Okay, I hit where I wanted. Damn, that's crazy, bro. That was another thing. We were like up in like this range, and I was like, these equal lows are crazy. But like, and the reason I looked at it, and this is the same strategy. I go over it in my video on how to use ranges. We shift to the downside, retrace the premium of that move, down to liquidity, down to discount, and it just takes some patience sometimes with these higher time frames. But that being said, you go to a monthly. So I would say this is the range you're within. As far as like the monthly chart, the monthly order block, so that's 227 and 156, pretty wide range. You are at a discount. It's kind of weird because this is like going against my stock analysis. Well, no, it's already really reacted and it came back up here. So it's seems like Tesla really likes these volume imbalances in the weekly. So if we draw the impulse move here, it didn't really come back up to a premium. It came close, very close. Formed some relatively equal highs. So if I'm looking at this on a weekly, the longs, I see the idea of it because we haven't taken any, this liquidity. We didn't travel into a premium, but at the same time, I wouldn't push the longs. If I'm gonna go to like a 4 hour and see what it looks like. I mean, a 4 hour, you look bearish. You look like you want to take out this low. Daily is pretty similar. The only thing that would hold me back is that we haven't moved into a premium. I'm just going to delete everything off this chart because it's too much. So, if we look, here's kind of our structure here. Boom, push down. I mean, I don't really consider that a new range. I would just consider that part of this range. So again, you guys know that my strategy, I really like making sure we're selling at a premium or buying at a discount. But overall, I think this is going down. Took out these weekly equal lows. Daily really hasn't given much of a shift that I like. What I would like to see here is maybe we take out these lows and then consolidate and then make a move up. But again, why we had looked at these lows, if we're on, I think it was a monthly chart. Can't remember what it was actually. Really, I mean, if you look at it, you could almost say this is a new range we're in because we could have said that this at one point was our massive range, kind of the external range we're in. Now it came down and taken out that low. So probably get some more manipulation, but I would wait till like NASDAQ and ES are agreeing with it. But, I would eventually want to see some upside. So we got a lot of inefficiencies to fill. But on that note, guys, I'm going to hop off here. We'll be back every day this week. 12 p.m. Eastern, we'll be live. I still haven't figured out what time we're going to do the class for the private Discord because I know I was on vacation this week and we didn't have one, but I am going to do that. And then we're going to do another one Sunday as usual, so you guys aren't missing out on anything. And yeah, if you guys like the video, comment, like, subscribe, do all that good shit. And if you want to get a free trial of the Discord, it is in the link. The link is in the description. And I'll see you guys tomorrow. Peace.